Hey, Intro to Accounting, Mr. Roberts here, and today we're going to be looking at Chapter 6.3, and we're looking at worksheets still, but then we're going to jump into adjusting entries for our service business. And essentially, what we're doing today is we're taking the things that we bought that were assets, and we are looking at them at the end of the month, and we're turning them into expenses. And when we do this, we're doing something called making adjusting entries. So that's the big takeaway that we're going to have, and we're going to calculate that out through our, we're going to record it on our worksheets is what it comes down to. So let's look at the learning objectives. First one's prepare the balance sheet and income statement columns of a worksheet. So we're going to determine what's on a balance sheet and what's on an income statement. Next is we're going to total and rule that worksheet. What that really means is we're just going to add everything up. And then learning objective number 7 is going to be apply those steps for finding errors on a worksheet. And once again, we usually call that controls. We're going to look at our controls at the end of this worksheet and say, hey, does these two totals actually match each other? And if they don't, well, then we have to go back and we need to find out where we made some errors. So let's just start out. The first thing that we're going to do is extend the accounts on our trial balance, okay? And when it says extend, all that really means is record those balances. We're going to take those trial balances and we're going to record the updated number either on the balance sheet or the income statement, all based on where those accounts go on that financial statement or what accounts are on each specific financial statement. So the first one that we're going to look at is the balance sheet account. So let's just go through the steps here. I know that sometimes it's hard to go back and forth between the pictures, but just take a look at our worksheet. All right, let's just jump into this first. And if you look, we have our trial balance. So we wrote down all of our balances from our general ledger. And then after that, what we did is we recorded some adjustments. So we've already done adjustments. That was in 6.2. And we did adjustments. We went into our supplies at the end of the month and we counted them all up and saw how much we actually used. And then we made an adjustment. We either debited it or credited it to change that trial balance. So what we need to do now, so we have our trial balance and our adjustments, is we need to extend these balances onto our balance sheet. So let's just look through the steps. It says extend the balance of cash, $2,597, to the balance sheet debit column. The balance of cash in the trial balance debit column is up to date because no adjustments affect this account. Extend to the balance sheet debit column the balance of all accounts with debit balances that are not affected by adjustments. Now, what does this mean? Well, if you look here on our trial balance, let's bring this up a little bit more. I'll get this out of the way for you. Oh, excuse me. Move that guy. All right, so if we look at this, you can see that here's all of our trial balances that do not have any adjustments at all, okay? You see that? They have no adjustments at all. Here, I'll pull this over even further. They have no adjustments at all. So what do we do with those accounts? We just transfer them over to our balance sheet column. And if it was a debit on the trial balance and there's no adjustments that are made, then it gets recorded as a debit on the balance sheet as well. We are just bringing those numbers over. That's essentially what we're doing. All right, so if that's step 1, okay, it's just extending. Cash was a debit on the trial balance of $2,597. Were there any adjustments for cash? No, there weren't. So we just transfer over onto the balance sheet the $2,597. And if you're wondering, well, why don't we transfer it over to the income statement? We'll get to that in just a second, right? Right now we're just looking at the balance sheet. So if we continue on here, it says calculate the up-to-date adjusted balance of supplies. So now we're going to supplies. And supplies is a little bit different because supplies have an adjustment, right? It already has an adjustment. So it says the balance of supplies in the trial balance debit column is not up to date because it's affected by an adjustment. We went in at the end of the month and we adjusted that. The debit balance, $620, minus the credit balance of $530 equals the up-to-date balance of $90. Extend the up-to-date balance of $90 to the balance sheet debit column using the same procedure. Calculate and extend the up-to-date prepaid insurance as well. So if we look at this, and I'll try to make it a little bit bigger again. If we look at this here, what's happening? Well, we have supplies, and supplies now had a debit balance of $620. Well, we made an adjustment, and we made a credit adjustment of $530. Now, what did that actually represent? Well, that adjustment that we made here from 6.2 is actually the amount of supplies that we used. So we needed to credit supplies to bring that account down. All we're doing now is calculating out what that new balance is and bringing it over to the balance sheet. So if we pulled up our calculator here and we take a look, all we're going to do is we're pretty much going to take the 620, and it's a debit balance of 620. We need to subtract the 530, and the difference is 90, okay? So that's going to be our difference here. And is that balance going to be a debit or credit? Well, we still have more debits than credits, so it's still going to be a debit. It hasn't kind of crossed over and gone into the credit side. So what do? We update that balance here, and it's going to be $90. We do the same thing for prepaid insurance. 900 minus the 150 is 750. And there we go. We've just transferred over our balance sheet accounts for any adjustments. So really, what adjustments did we need to make? Well, only the ones for supplies and prepaid insurance. Everything else, we're just transferring over. That's it. So that's step 2. It's going to be looking at the accounts that have adjustments on file. And then the last one, it says extend up-to-date balance of accounts payable to the balance sheet. In the trial balance, it just pretty much says extend everything else, right? So here, you can see that after prepaid insurance, we are done with the assets. Okay, so we transferred those over. Now what we're doing is we're looking at liabilities and equity accounts. And the liabilities and equity accounts also get transferred over to our balance sheet. And when those balances extend, and when we do that, because they had a credit balance, well, now when we move them over, they will have a credit balance on the balance sheet as well. So it's probably a good thing to go over, like, what are the two financial statements that we're looking at here, and we're going to look at both of them. But the first one is income statement, and what we're working on now is balance sheet. So let's look at the balance sheet. This is a financial statement that reports the value of a business's assets, liabilities, and owner's equity on a specific date is our balance sheet. Now, you're going to need to know the specific accounts that are on a balance sheet versus an income statement. These are two of the most common accounts that you're going to use in any business. They are like core financial statements. So the balance sheet, if we look at what it's made of, it says the assets, liabilities, and owner's equity. Well, what is that? That is the accounting equation, okay? A balance sheet, what's on a balance sheet? The accounting equation is on a balance sheet. That's what you need to remember. It's pretty easy to remember too, right? Balance sheet is the accounting equation. So any assets that we have, any liabilities, or any equity is going to get extended over to the balance sheet. And what did we just do? Well, we did all of our assets, all the way down to prepaid insurance. Accounts payable accounts are liabilities. Michael Delgado's capital and drawing are both equities. So you can see that all of that gets transferred over to the balance sheet. Next, we're going to look at the income statement, and that's a little bit different, okay? Anything else about the balance sheet? The balance sheet is, how you kind of think about it, is a snapshot of a picture in time. So it's the balance sheet, when we actually calculate it out, it's going to be all the company's assets, liabilities, and equities on a specific date. But next, we're going to look at extending income statement accounts balances on our worksheet. This is the same thing. except it's a little different. Let's go down to the bottom and read what this is. A financial statement showing the revenue and expenses for a fiscal period is called an income statement. So what that is all the revenue accounts and all the expense accounts. That is what's going to be on our income statement. And an income statement shows all your revenues and expenses for an entire month or an entire year, depending on when your fiscal period or your accounting cycle or accounting period is. So if we look here, you can see that we do have this account called income summary, which we'll get to a little bit later. But the first thing that we have on our trial balance is sales. And what do we do with sales? Well, sales is a revenue, so we're going to extend that balance onto the income statement. So we had 5,820, and we're extending that credit balance over to the credit balance on the income statement. Same thing over here with all of our expenses. Everything else listed as an expense. So we're going to extend all those balances over to the income statement. What's the thing that we really need to look at though? The adjustments. And which adjustments do we have here? Well, these are the adjustments that are directly related to the two accounts that were on the balance sheet, right? We have insurance expense and supplies expense. So we do the same thing here, except it's a little bit different for the first time for these two accounts. Why is that? Because we didn't have any insurance expense previously. So if you look on the trial balance, insurance expense was blank. And now the adjustment is a debit of $150. So we're not finding the difference between two numbers. What we're going to do is we just extend over this adjustment of $150 as a debit. Okay, because there was no previous balance is what it comes down to. The previous balance was 0. So we kind of almost get to skip a step, which is nice. So that's how we're going to extend everything over for our income statement. So it's the same thing. It's the same thing for a balance sheet and an income statement when we extend those balances. The big difference is which accounts are actually being extended. All right. So now that we just did all that, right? We extended all those accounts. What we're going to do now is we're going to total our worksheets, and we're going to figure out our net income. Now, net income, let's just go down to here because they give you the example at the end or the definition at the end. But let's figure out what we're actually going to try to calculate here. It says the difference between total revenue and total expenses is going to be net income or net loss. So if we have more revenue than we have expenses, we're going to have a net income. If we have more expenses than we have revenue, we will have a net loss. But it's the difference between revenues and expenses. Now, if you're running a business, what do you want? A net revenue a net income or a net loss? Well, you're going to want a net income, right? Because that means that your company's making money. If you have a net loss, it's probably not good. Some companies can run a net loss every once in a while. We have weird companies out there like Netflix and a bunch of other companies that had net losses for a while, but still had a lot of people investing in them. But for the most part, if you're a small company, you're going to want to make a net income because sometimes this is also going to be referred to as your profit. So what do you get to take home at the end of the day from your business or at the end of the month? So let's just go through this, and I'm going to go through each step because there's a lot of arrows here and it gets a little bit confusing. But just remember that when we're totaling and ruling a worksheet, that really means we're just adding everything up. Okay, so it looks really complicated, and one step in here is a little bit complicated, but the rest of it's just kind of adding. So the first one says rule a single line across the 4 income statement and balance sheet columns. So all that we're doing here is drawing a single line, and we're on our worksheet, we're under income statement and balance sheet. So we draw a single line under here. And what are we going to do? We're going to add the income statement and balance sheet columns. and then we're just going to write the totals below it. So here we've added up all of our expenses, and for our income statement in our debit column, we've added up. I'll bring this up a little larger. Okay, so over here, we've added up all of our income statement debits, which are all of our expenses. And what does that equal? It equals 2,658. Okay. Now, if we look over here on our income statement, we add up all the credits. Now, there's only one credit, and what is that credit? It's just going to be our sales, right? So when we do this, we're just adding up one number. And you might see at this point that they don't match. And that's weird so far for anything that we've been totaling, because we're always looking and going, do they match? They're not going to match. Why? We just take a step back, we're looking at we're adding up all of our revenues under the credit column and all of our expenses under the debit column. Now, would that be good if we spent every single penny that we made? No, it wouldn't be. And how likely is that when you're running a business that you brought in $10,000 and you spent $10,000? Highly unlikely. So we don't need these numbers to match when we're totaling them up. Same thing over here for the balance sheet, right? We're going to take all of our debits and add them up, and we get $5,387. And then we take all of our credits, which is $2,225. And these aren't going to add up to the same number either, and that's fine. They will eventually when we get down to the final little thing here, but not yet. So there we go. We have just added up, totaled our debits and our credits on our income statement, and totaled up our debits and our credits on our balance sheet. And those numbers do not need to equal the same thing. So let's go a little bit further here. Now this is where it gets a little bit more complicated, okay? Number 3, it says calculate the net income. The income statement credit column's total of $5,820 minus the income statement debit column total of $2,658 is going to equal our net income. Taking a step back, just remember net income is the difference between revenues and expenses. That's what they're having us calculate here. Write the amount of net income below the income statement debit column total. Write the words net income on the same line in the account title column. So for number 3, what we're actually doing here, let me just pull this up one more time. So what we're doing is we're finding the difference on our income statement. And this is the hardest part. Now, I know that you can find the difference between these two totals, right? And when we do that, when we find the difference between these two totals, it's obviously 5,820 minus 2,658. If we look at this, this is all of our expenses, 2,658, 5,820 is our revenues. So we find the difference between it, and we end up with a net income of 3,162. What you need to remember, though, is that if you have a net income, it will be recorded as a debit on the income statement, okay? So when we look at the income statement, and if we have a net income, we need to calculate it here as a debit. Now, this is a little bit weird. We need to record it as a debit, so when we extend it over to the balance sheet, it can be a credit. But for right now, I just want you to remember this little bit of a trick is what I would call it, okay? Whatever side is larger, right, on this our income statement balances. So when we look here, is which is larger, 5,820 or 2,658? Well, the 5,820, right? So what I do is I almost draw like an L, okay? And that might be a little bit weird, but I'm going to say 5,820 minus 2,658 is 3,162. And what I'm doing is I'm calculating it. Here, let me draw it real quick. So how I'm actually calculating it is going to look like an L like this, okay? Like that, okay? This is how I kind of think about it. And when I first had to learn it, that's how I kind of started drawing it out here, okay? but you're taking the number on the right and you're subtracting the number on the left, and then you're going to record it on the debit column. And I know this is a little bit weird, might not help for everybody, but that's how I remember, at least for now, that we need to record the net income underneath the debit column here, because this is our net income, $3,162. Now, if, let's say we had a big if here, I'm going to close this out real quick. Oh, shoot. That happened last time, didn't it? All right. Let's close this out and look at it down here. So you can see that L, right? I took 5,820, or that back, I guess it's not really an L, but what I'm doing here is I'm calculating it out from this right-hand side and then kind of making this shape here. And that's how I know that it's going to be recorded on the debit side. Now, what if we had more expenses than we had revenues? Well, then you'd actually calculate it the opposite way. So let's say these numbers were switched and our debits was 5,820 and our credits was 2,658. Well, then we'd actually take the expenses first and subtract the credit, and then it would be calculated this way. And if we had a net loss, we would have to record the net loss underneath the credit column. Now, when is this going to come up a whole lot? Yeah, it comes up in I think 2 of our problems that we go through. And when you first learn this concept, it can be a little bit difficult. But what I would just say is, whatever is the largest number, you take that and then you subtract from whichever side you subtract. That's where you record your debit or credit. So some people will just be able to remember it, and that's fine too. If you can, that's great. But that's just a little trick that I think that I personally would use when I'd first start out kind of learning accounting. So once we record our net income, and we're going to just stick with net income here as a debit, the next step that we actually do is, well, we're going to write in net income here, but then we're going to extend this over to our balance sheet, okay? Because this net income is actually going to affect our balance sheet as well. So because it's a debit on the income statement, now, once again, this is a little bit funny, we're going to bring that net income over to the credit column of the balance sheet. This is where the rules aren't being broken, but everything that we've done before when we're transferring from our trial balance to our income statement or whatever else has been kind of the opposite. So that's why this part is very, very vital that you understand that if we have a net income that's a debit, we transfer it over to a credit on the balance sheet. And you can see here that this is step number 4. It says extend the amount of net income to the balance sheet credit column since the owner's equity account increases by a credit. This is huge, okay? Michael Delgado's capital, because now we have a net income, that means that we've made money. We need Michael Delgado's capital to increase. How do we do that? We must credit it, okay? So that's why this is a little bit different than when we've extended balances in previous steps. And then after that, what we do is we are going to add up the numbers that we have here, right? We're going to total and rule once again. We're going to take our income statement debits that we already calculated, add in the net income, and then our total should be 5,820. Now you can see that our debits actually equal the same as our credits, 5,820. If we go over to our balance sheet, we do the same thing. 5,387 stays the same. There's nothing to add to it. But the credit amount, 2,225 plus our net income of 3,162 will be 5,387. So our balance sheet columns, our debits and credits will now match, and so will our income, debit, and credit columns will now match. Once we find that they match, we do a double rule line underneath that. So there we go. This is the last part of our well, it's not the very last part, but it's one of the last parts of our worksheet here. It gets a little bit complicated at the end, but once we do it a couple times in practice, you'll kind of see how it all rolls together. So this is what I've kind of talked about, I guess extensively now, is calculating and recording that net loss. If it was a net loss here, you can see that we would record it as a credit, and then when we extend that to our balance sheet, it's going to be recorded as a debit, or it's going to negatively affect Michael Delgado's capital. So once again, if we're kind of looking at this, you can see here that it has a larger debit balance. So it's literally taking the debit balance then to the credit side, and then what I'd say is you kind of have that arrow going down and you record net income, or excuse me, net loss as a credit. And I know that's really messy, but I would just look at the direction of your kind of math that you're doing, at least when you're starting out, right? More debits than credits. So then I know that our net loss will have a credit balance. So you might have to cement it to memory a little bit, or you can remember, and this is a little bit, it's not backwards, it's just a lot of steps. You can remember that if you have a net loss, it would need to be recorded as a credit. So then when you extend it to the balance sheet, it's a debit and negatively affects capital. But once again, that can be quite extensive. So that's why I'm trying to show you guys that little trick. All right. We're going to skip past that. So it jumps into checking and correcting errors on the worksheet. This is in a lot of chapters, right? Where it just kind of goes through, all right, if there's an error, what are some of the things that it could have been caused by? So there's different kinds of errors that could be made on preparing the worksheets. There could be errors in the accounting records. What does that mean? Well, our ledger could be wrong. Our journal could be wrong. So we might have to actually take a step back from this worksheet and go back into our ledgers or into our journals if those numbers are actually incorrect. That's the whole purpose of this worksheet, though, as well, right? Is to make sure that all of our accounts are accurate, to then make those financial statements. If they're not accurate, we get to go backtrack, and do a little bit of detective work. There may be errors in calculations. Maybe you've recorded your adjustments wrong. Maybe you added or subtracted wrong. It's always a possibility. And an amount may be entered in the wrong column. Always something to look at, right? If we look here, it kind of tells us different ways that we can correct those worksheets. I'll let you guys look through that, because this is getting a little bit long. But there are some different types of kind of little tricks, right? It says the difference is one. It's probably an error in just addition. Okay, it's how we added that up. If the difference can be divided by evenly by 2, for example, the difference between two columns is 28, and you can divide it by 2, look for a 24 amount on our trial balance. Because what happened is you probably recorded it under a debit when it should have been recorded under a credit. So that's a really nice way where you're like, hey, my totals don't match up. You figure out how much, and then you just divide it by 2 and look for that number on your trial balance. The divided by 9 is a little complicated. I don't always look for it that way. And then maybe you just omitted something, right? So a couple different things, and you guys can kind of jump in there and take a look at it, because this lecture is almost hitting the 30-minute mark. So we're going to stop it here. That is lesson 6.3, and we're going to jump in to the work together and on your own problems. All right, so jumping in here to the 6.3 work together. And you can see we have our trial balance and our adjustments already calculated for us. Oops, let's bring this forward. We have our trial balance already calculated for us. Let me just make this a little bit bigger. There we go. And we're going to extend these accounts over to our income statement and balance sheet. So let's go ahead and jump into this and do it. Cash is what kind of an account? Well, it's an asset. So it's going to be extended over to our balance sheet. And let's just go over that one more time. Balance sheet has assets, liabilities, and equity. So cash Petty cash, accounts receivable, supplies, prepaid insurance are all assets. They're all going to be extended over to the balance sheet. Accounts payable is a liability. It's going on the balance sheet. Connor Whitney Capital and Connor Whitney Drawing are both equity accounts, so those are going on our balance sheet. So I know that all the way down to number 8 will all be on our balance sheet. Income summary is an account that we'll use later, but income summary is kind of separating what goes on our balance sheet, and then everything else, sales is a revenue, so it's going to go on our income statement, advertising expense, cash short over is an expense, insurance expense, miscellaneous expense, supplies expense, utilities expense. These are all expenses that'll go on our income statement. So just starting out, kind of remembering what's going on what statement. First thing on our balance sheet, cash has a debit balance of $4,900. We just extend this over. Are there any adjustments for cash? No. So all we're doing is transferring over from one to the next. Debit is $75. Okay, $75. Or excuse me, petty cash $75. It's a debit balance. We extend it to the debit balance of the balance sheet. Accounts receivable, B. Whittle here, $13.87 as a debit. We just transfer that over. Now, what we have here is our supplies account, okay? And our supplies account has an actual adjustment that's taking place. So let's go ahead. Let's go ahead and calculate out what this adjustment's going to be. So we had a debit balance of $228, and we are going to subtract $153. We have a credit adjustment of $153. What we get is $75. So we get $75. Is that amount a debit or a credit? Well, it's still a debit, right? We have more debits than credits. So it'll be $75 here. Next, we have prepaid insurance. So let's go ahead and calculate out this adjustment. We had $375 as a debit. We're going to subtract $125 credit, and we're going to have a balance of a debit of $250. Okay, so we're through all of our assets. We have accounts payable, which has a credit balance of $267. We have capital, which has a credit balance of $7,443. And we have drawing, which has a debit balance of $1,700. Income summary, we're just going to leave blank. And over here, we start getting into some of our income statement columns, or excuse me, income statement accounts that we're going to have to extend over to our income statement. So we have sales of $2,162, which is a credit. So let's move that over to our income statement credit column, extend it. Advertising expense of $460 as a debit. Cash short and over is an expense. Remember, that's an expense that we have. So it's $6 here as a debit. Next, we have insurance expense. And this can be tricky, okay? Because it looks like you record this as a credit, but you're not, right? So there's no balance on our trial balance. But at the end of the month, we went in there and we made an adjustment. Make sure you look, where is this? What is this adjustment? Is it a debit or a credit? It's a debit of $125, okay? It's a debit of $125. Then we go down to miscellaneous expense, and it has a debit balance of $189 with no adjustment. So we just extend that $189 over. Next is supplies expense, and all we have is a debit adjustment of $153, and then utilities expense of $550. So here it's just asking us to add up our totals. So this is what some people might do, okay? Let's look at our income statement. Now, you know that in a lot of things that we do, that these need to match. But in this case, they don't need to match. So sometimes people will be a little bit lazy and they won't get out their calculator. And what they'll do is they'll just do 2,162. And they go, oh, well, this must equal 2,162. And they'll write that in there. That's not going to be correct, okay? Make sure that you do not do that. That is something that I recommend you do not do, because you will get every problem wrong. Because remember, if we just take a step back, here's all the money that we made, here's all the expenses that we accumulated. They shouldn't equal. That would be very unlikely for a business. So let's add up our income statement debit columns. We have 460 plus 6 plus 125 plus 189 plus 150 plus 153 plus 550. And I got 1483. I'm just going to check my numbers one more time. You know, we're entering them in pretty quick. We want to make sure that they're correct. So we have 1483. We go over to the right-hand side here to our balance sheet columns. Let's add these up. I have 4,900 plus 75 plus 1387 plus 75 plus 250 plus 1,700. I get 8387. Let's look at those numbers again. Okay, looks good. And then on the right-hand side, the credit column, I have 267 plus 7443. And I get 7710. Okay, so you can see that these aren't matching, but that's okay. They're not supposed to match yet. So let's grade step 1. What do we have here? There we go. I transpose one of the numbers over. So 2,162 I put in as credit, when really it was 2,160. That's why we're checking over our numbers. I had a feeling like something was a little bit off, right? So make sure that you're looking at that when you're transferring these numbers over. I just put in an extra $2 for some reason. So let's go on to the next step. Let's calculate out our net income or net loss. If you look here, our updated number is correct. We're not missing that, or they took away the $2 that I added in. So, yeah, make sure you're checking over your numbers. Every once in a while, I'll add in an extra one. That's why if I was doing this on my own, I'd make sure I go through and take my time and check over every single number, because sometimes I transpose numbers every once in a while. So let's jump in to our income statement. What we're doing here is calculating our net income or net loss. So right away, before anything, I can kind of tell if I have a net income or net loss before I calculate out anything. And I just can tell, do I have more sales or expenses? Well, I have more sales, right? At 2,160, my credit column of our income statement is more than our debit income statement, all right, at 1,483. So I already know that I have a net income. Where does net income get calculated? Well, it gets calculated in the debit column, right? And I can kind of use my little thing, my little L that I use here and say, okay, I have the larger number under credits. I take the larger number minus the smaller number, and then I record it directly underneath. So the first thing that I'm going to do is I'm just going to record net income, because I know it's a net income here versus a net loss. I'm going to write that right here, and then I'm going to calculate this out. So let's do 2,160 minus 1,483, and I get 677. Now the next thing I need to do is I need to extend this balance over to the balance sheet. And because it's a net income, it needs to be credited. It needs to be credited on the balance sheet. It needs to increase our equity. So if we look at this, I'm going to put 677 underneath the credit balance. After that, we're going to calculate. We're going to draw a single line, and now we're going to add up our new totals. So I have 677 plus 1,483. It's going to equal 2,160. Over here, I'm going to just bring down this 2,160. Now over here on our balance sheet, our debits is going to be 8,387. And now I'm going to add 677 plus the original amount is 7710, and it's going to be 8387. There we go. Now I'm going to draw 2 lines underneath that to show that they all equal each other. Just so we can use my mistake as an example here, what would happen if you guys remember the little mistake I made where I put a 2 here? What would happen if I had 2,162? So let's go 2,162 because that was the mistake that I had minus the 1483. Well, it'd be equal 679. Now, think about this for a second. 679 would be our new net income. And if I took 679 plus 1483, our amount here, what would it equal? It equaled 2162. So on our income statement, the amounts would actually balance. Kind of scary, right? Because that means that the number would be wrong and it would still balance. So how do we use that mistake that I made to kind of show just a little bit of a cautionary tale here that they could still balance and it could be wrong. So you really need to make sure that your numbers are correct. Now, if this was 690 or if this was 679 and we transferred it over though to this right-hand side, let's do 7710 plus 679, and that's 8389. So then this total here would be 8389, but what about our debit balance sheet column? The total is going to be 8387. So these two are actually not going to match. So the debits and credits on the balance sheet will not match. And that's going to tell us right there, oh my goodness, we made a mistake somewhere. We need to go back and look at it. So even though our income statement, debit and credits will match, our balance sheet will not. This is a great control that's built in that's going to help us if we make a mistake. And finding errors is the last part of this chapter. So all kind of works out all right for the mistake that I kind of put in that extra number for. So let's grade the final step. And there we go. 3 out of 3. It all works. So let's save and continue here. It's going to bring us to our on your own, which is the same stuff. Okay. And let's grade it. We should have like a 4.95 because of that 2 that I put in. It actually will calculate it out as a 5 out of 5. So there we go. That's the work together and on your own. Make sure that you do the terms review for this as well and the application problem. The application problem is exactly the same. Okay, same stuff. Make sure that you're watching out for net loss versus net income, and that you can calculate out what a net loss is, and that you know that if it's a net loss, you're going to record it as a credit instead of a debit. So if you have any questions, please let me know, and have a good rest of your day.